Chargepoint stock price prediction. Okay guys, so here's the first video as Chargepoint as a brand new IPO company. So the merger is being complete, and I noticed that there was a lot of confusion. Even me personally, I ended up buying these shares in Fidelity, and for like the whole trading day, there was a lot. It was like hard to kind of figure out what was going on because I still had shares of SBE and I had shares of CHPT, so things were kind of confusing, but it looks like everything's settled now. I checked, you were able to trade with ChargePoint on most brokerages like TD Ameritrade, Webull, Robinhood, Fidelity, etc. guys. So it looks like the merge is complete. Before we get into the video, guys, make sure you guys grab your 2 free stocks on Webull, guys. Webull is an awesome stock trading app, my favorite alternative to Robinhood. And all you have to do is sign up using the link in the description below or go to investortrip.com/Webull. Get your 2 free stocks valued up to $1,850. Okay, back into the video, guys. So what is going on with ChargePoint? So, a lot of people are saying they bought the stock up here at around $45, and now, unfortunately, ChargePoint stock is down 28% year to date. The good news is that if we take a little bit of longer term view, stock is still up 185%. So the first thing I'm doing is, obviously, I've been basically dollar cost averaging with ChargePoint. I try to buy shares at least every 2 weeks, every month as possible to slowly build up a position. So right now, my average purchase price is around $25. So I'm slightly up simply because the stock has gone down quite a bit from its peak back in late December, early January. So what's going on here? Is it time to sell, cut your losses? If you ended up buying here, what should you do? So first thing I want to talk about is the fact that ChargePoint is by far the best EV charging play out there, and it's really not even close. So there's a really nice article on Investor Place. It talks a lot about more of this in depth. It has some great points here. A lot of the points that I mentioned earlier in some previous videos. We're at a 60% compounded annual growth rate for ChargePoint, and this company is planning to grow like gangbusters. So they're planning to deploy around 2.5 million charging stations. That's around 10 to 15 times as many charging stations as they currently have by 2025. And they already have around 4,000 customers, including 60% of the Fortune 50, guys. So they're by far the best play out here. Joe Biden has a huge $2 trillion infrastructure plan that's fighting climate change. So everything is looking good. So obviously in the short run, there are a few headwinds, mainly because after a lot of these SPAC deals, a lot of people end up, cashing in on their profits. And we've seen this not just with ChargePoint, we've seen this with a lot of stocks. Tesla stock has been going down, NEO stock's been going down. So don't think that this is something wrong with ChargePoint. I think a lot of stocks in the EV sector have been selling off recently from the recent highs a few months ago. So obviously, if you're looking for a short-term trade to make quick money, this probably isn't the best option for you. But if you're a long-term thinker and you realize that, hey, this is the leader in the EV charging space in the United States, and obviously the United States is going to be one of the biggest, most profitable marketplaces when it comes to the EV industry. Tesla started in the United States. So, you've got Fisker that's starting up. You've got Lucid Motors. So, America is full of these awesome EV companies that service consumers, but then you've also got the commercial side. You've got companies like Workhorse, Helion, Nikola Motors. So there's just an explosion of new companies that are going to be producing vehicles, and these vehicles are going to have to be charged not just by consumers, but by businesses, governments, basically any entity that's going to hold an electric vehicle. So now let's kind of back up for a moment and take a look. Do you really think that the largest charging network in the United States is going to stay at around $28 per share for long? So now, after this merger is completed, now the market cap for ChargePoint has actually been going down quite a bit. So now this market cap would be something like around $9 to $10 billion, which is a joke considering that Tesla trades at a market cap of a ridiculous much higher market cap. Okay, so we'll take a look here. So Tesla literally probably only sells 1 to 2% of all the EVs in the entire world, yet the market cap is $658 billion. But ChargePoint stock has a market cap of around $9 to $10 billion. So obviously Tesla was a leader in terms of growing in the EV space, but Chargepoint was a leader as well. Chargepoint has been around since 2007, and they by far have the most charging ports and charging stations in the United States. So for me, Tesla is obviously the innovator when it comes to EV vehicles, but ChargePoint is the innovator when it comes to EV stations, guys. So in the future, EV station companies are going to be way more valuable than car companies, simply because, you know, no matter whether you have a Tesla, a Volvo, a Lucid Motors car, a Nikola Motors car, you have a Fisker vehicle, whether you have a Neo, whether you have a Candy vehicle, whether you have a Solo from Electromechanica, you're going to need to find a place to charge these companies. So I'm thinking that there's going to be a big, you know, there's going to be a big turn of valuations. So currently right now, these car makers are more valuable because there's a lot of hype and there's a lot of excitement. But as you can see now, with more competition, even though Tesla is primed to hit those targets, you can see a lot of these car makers selling off, and a lot of these new EV station companies are either going public via SPACs. Obviously, you have Nuve that's coming up, EVgo that's coming up, EVbox back in Europe. So these charging stations are basically new to the game, where a lot of these EV car stocks have already been in the game, like Tesla and things like that. So I think the opportunity for ChargePoint is ridiculous. And I also want to mention that simply the fact that ChargePoint has a lot of nice partnerships. So the best partnership they probably have right now is they have with Volvo. Basically, they provide a home flex charger for every EV that Volvo sells. So this is awesome, guys. So basically, when people, they can do more partnerships like this. Basically, when people buy a Volvo, they'll be able to charge it at home using ChargePoint. And ChargePoint is also the #1 selling charger on Amazon as well, and it's also the most expensive one. So there's a nice premium with this company. You know, the CEO, Pascal Romano, he actually virtually rung the New York Stock Exchange bell on Monday. This is a huge opportunity, guys. Obviously, you know, never invest money that you can afford to lose. Remember, this is not investment advice. I'm not a personal advisor. I'm not telling you what to do with your personal money. You know, obviously, you want to definitely do your own research, but this is a major, major opportunity. We've got a lot of market cap that has to be sucked up from basically a lot of these gas companies like ExxonMobil and BP. A lot of the market cap, a lot of the dollars are going to start gravitating towards these charging stocks, because while you've got these EV companies that are basically fighting with each other for sales and deliveries and things like that, ChargePoint started building their stations in 2007, and they're going to have 2.5 million in the next 4 years. They could just sit back, and it really doesn't matter which company is going to do well. They're going to continue to make money. So that's why I have a $3,000 price target for ChargePoint, because they're an innovator. They were the first to the game. They're the biggest in the United States. And we saw exactly what happened with Tesla. They were the first to the market. They were the biggest in the United States, and the stock price went through the roof. So under $10 billion market cap is a complete joke for this company. I believe this company is worth at least $1 trillion in the long term, because this whole EV shift is not a joke. It's really hard for people to conceptualize now, because you'd have to be thinking about 5 years into the future. But, you know, gas guzzling ICE vehicles, you guys, this technology is 150 years old. We live in the 21st century. These vehicles are going to be replaced. And by 2025, 2030, if you don't have an electric vehicle, you're going to be seen as like weird. So that's why I like ChargePoint so much. I just really think this is a great opportunity for investors. $28 is just too cheap. For me personally, this is a $3,000 stock within the next 5 to 10 years. Within the short run, I think ChargePoint is probably worth at least $100 billion company. I mean, how is Tesla worth, you know, according to its market cap, its latest market cap for Tesla is apparently, according to market cap, worth over 60 times as much as ChargePoint, which is just absurd. So that's why I think it's just grossly undervalued here. It's a great opportunity. Me, I'm just going to continue to buy. I'm not going to really try to guess where the price is going in the short run. Like I said, the merger just completed, so I think it's a great opportunity. But obviously, guys, do your own due diligence, but that's just my point. I think it's a great dip buying opportunity as well, just along with Neo as well. I think ChargePoint and Neo are two great stocks you can dip buy. So that's it until next time, guys. I hope you enjoyed this video. Please give me a thumbs up if you enjoy my content, and smash the red subscribe button to receive more videos from me. Be sure to check out my private Discord chat and my daily stock watch newsletter on Substack. So that's it until next time, guys. Take care.